Bitcoin market analysis. Bitcoin continues to dominate the cryptocurrency landscape, even as it trades below the $110,000 level. Despite this pullback, the digital asset remains a centerpiece of global finance, supported by ongoing institutional adoption, shifting regulatory frameworks, and steady technological development. These factors together shape Bitcoin's near-term and long-term outlook. Current market performance. After reaching record highs earlier in the year, Bitcoin has experienced a notable decline, falling more than 10% from its August peak. This correction has triggered a wave of liquidations across the market, especially from over-leveraged long positions, highlighting the increasing pressure from bearish sentiment. Trading activity has cooled, with both spot and futures markets showing reduced volume. On-chain activity has also slowed, signaling that many investors are adopting a more cautious stance while awaiting clearer signals from macroeconomic conditions and market indicators. Institutional adoption and regulation. Institutional interest in Bitcoin remains strong and continues to expand. The approval of spot exchange-traded funds earlier in the year was a landmark event, drawing tens of billions in inflows and positioning Bitcoin as a core alternative asset. Large financial institutions and asset managers have increasingly encouraged Bitcoin allocations in diversified portfolios, often presenting it as a modern equivalent of gold. At the same time, regulatory discussions remain intense. Authorities across major economies are still debating issues such as mining's environmental footprint, taxation, and how best to integrate Bitcoin into mainstream payment systems. While this scrutiny presents challenges, it also underscores Bitcoin's growing importance in global financial policy and governance conversations. Technological evolution and ecosystem growth. Far from being a static network, Bitcoin continues to evolve through technical innovation. Recent upgrades have opened the door to enhanced programmability, including compatibility with smart contract platforms. This represents a significant step toward expanding Bitcoin's role from a pure store of value into a broader base for programmable financial applications. Mining activity also reflects the resilience of the ecosystem. Difficulty has climbed to new highs, reinforcing the security of the network and highlighting the competitiveness of miners worldwide. At the same time, there is a strong push toward renewable and sustainable energy sources as environmental concerns around mining remain a focal point in the global debate. Market sentiment and outlook. Bitcoin's price movements remain closely tied to broader economic trends. Inflation data, interest rate policy, and geopolitical developments all play a major role in shaping short-term momentum. Technical indicators suggest that while the market has faced sharp corrections, signs of bullish divergence are emerging, pointing to the potential for recovery if conditions stabilize. Large holders, including institutional players and crypto whales, continue to maintain significant positions, signaling confidence in Bitcoin's long-term trajectory. This consolidation of strong hands, alongside broader ecosystem growth, suggests that the asset is maturing into a foundational part of the financial system, rather than remaining a speculative instrument alone. Key insights. Bitcoin now faces strong technical resistance at higher price levels, which will test whether the asset can reclaim upward momentum or face additional rejection. The market remains volatile, heavily influenced by institutional flows, investor sentiment, and regulatory developments. However, continued innovation in the Bitcoin network, increasing emphasis on sustainability in mining, and the persistent growth of institutional involvement all strengthen the foundation for its long-term future. Staying informed through reliable updates and detailed analysis will be crucial for navigating this fast-moving market as Bitcoin continues to redefine its role in the global economy.